The 2000.com bubble and today's AI bubble share one key similarity. It is the anticipation of mass adoption. And back then, it was the anticipation of mass adoption for internet shopping. Today, it is the anticipation of widespread AI usage among individuals and businesses. Yet today, we are still debating whether or not to integrate AI in our work and day-to-day living. So are we in an AI bubble? This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Internet shopping is a reality and it is here to stay. However, it was overdriven leading up to the year 2000 peak. When the bubble burst, it hit a trough in the year 2002, and since then it has been continuous this upward run from here, around 2004, and it continued to today. And the same is true for the AI. It is also a reality and it is here to stay for the long runway. However, there's another major problem beyond the future mass adoption. And let's take a look at this chart down here. It is the mass debt tied to the capital expenditure. Many investors suspected that these hyperscalers are using their cash reserve for this massive spending, but we are seeing a different narrative down here. In this article published in June, titled Big Tech Double Debt Load to 350 billion in AI Spending Spree. And this article brought to my attention. It is also on borrowed money. The money they spent is on borrowed money and it's not a small sum. Just to get a sense how much they have spent on this race among each other, most of us have heard about AI through the launch of ChatGPT at the end of 2022. So from 2022 till the end of this year, 2026, the accumulated Capex should be in the range between about 1.5 to 1.7 trillion US dollars. My concern is interest rates. On any higher interest rates, borrowing costs goes up and it adds burden to all these debts. And let me zoom out of this and let's get into this study here. So apart from all these concerns, my greatest is AI debt is the or AI bubble is the rising borrowing costs. I suspect that this is not even in the list of most investors yet. And the rest of these concerns are still valid, which is the valuation risk, over optimistic growth expectation, the weak monetization, or there's this unsure about how much will they bring in, the ROI, and of course the energy shock. So has the AI bubble pops? And let's take a look at another study here. We are looking at all the AI related stock. And I'm seeing some domino effect here, starting from Microsoft and Meta peak last year in July and August. And since then, Microsoft was down 37% and Meta is down 28%. So back then, we also discussed about this double top for Microsoft. And let's take a look at that was July last year. And where is Microsoft today? It is much lower. And the rest, the domino effect started from Microsoft and Meta. And the rest is starting to also show some sign of development between May and June. We saw that NVIDIA is down 19.8%, Alphabet down 19%, Amazon down 19%, and Broadcom down 28%. And the recent days into weeks, the powerhouse of DRAM started melting down. We saw that it was down around at least 31%. And let me just include a divergence, and let's study about the this indicator. What I'm seeing here, that's between the price and the strength of the rally. There's some divergence here. And how about the Nasdaq? And I'm seeing the same reading, and many other AI stocks I'm seeing a lot of reading here as well with divergence. Let me just plot on the Nasdaq, and the Nasdaq we're seeing some divergence. So it means that as of this juncture, I'm having a pit stop break in this rally. So as long as the market is not closing above this all-time high, if it does that, it means that the rally continues. If not, then I'm making plans to hedge into the current situation. I have a quiz for you. When did the full-blown mass adoption for internet shopping being achieved? In my opinion, it was during the COVID in 2020. 20 years later after the bubble pops, the dot-com bubble pops in year 2000. And we saw that during COVID-19, we saw that how the young and old doing online shopping at the comfort of their home. If you find what I just shared is useful, please like it and save the link for future reference, and also share this information to your friends. My name is Con Hao, and enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets for tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.